Hey everybody, welcome to the Wealth Advisory's Top 10. We're on, as you can see, to April 2025 because the year's just flying by, dragging by at the same time too. Markets are still kind of volatile, huh? Yeah, a little bit. Uncertainty was the word of last month, and I feel like it's still the word of this month. I mean, we can be certain that we're going to be uncertain about things. The markets hate uncertainty, right? Like I said last month, they love good news. And if bad news is expected and we get bad news, well, then they take it, you know? They don't mind that. It's the uncertainty that causes all this volatility, you know. Tariffs are on, tariffs are off, tariffs are coming, maybe they're not. They're going to be widespread, they're going to be targeted. It's just, there's a lot going on out there. I don't know what else to say, but there's a lot of confusion in the world, and markets hate confusion, and so we're going to see a lot more volatility. Our top 10 last month is kind of indicative of that, I think. We basically were 50-50. Half of our picks were in the green, half of them were in the red. Markets were all down between this morning when I checked 3 and 4%. They were down further than that. The S&P 500 got down into a 10% correction territory. The Dow Jones had dropped 9% from its near-term peak. NASDAQ was down like 14%. All of them have recovered around 3, 4, 5% respectively. So, you know, did we see a bottom? Maybe. You know, are we going to have more volatility? Probably. May we retest that bottom? Perhaps. So, you know, there's some more uncertainty for you. I hope you enjoy that. We got some good stocks this month. We're sort of leaning into the picks that are doing well because of the uncertainty. I think you're going to see that. Yeah, I mean, it sort of is what it is. It's tough to forecast even in the short term when you don't know what's going to happen from day to day. And so we're doing the best we can. I feel like we performed better than the markets last month, even though we didn't, you know, eke out an average gain. With the markets being down, we still lost less, which, you know, I guess it's a win. It's not the kind of win I like to take, but I'll take a W. So we've got a good list for you guys this month. We're more focused, like I said, on stuff that's really just sort of guaranteed to do well when uncertainty strikes, and I think uncertainty is going to continue to be a theme throughout pretty much all of 2025. Who knows? Maybe the administration will surprise me and things will settle down before then. But you know, uncertainty for now is the theme, so that's what we're banking on, and that's where our picks are going. And before we get to the picks, I just want to remind everybody that's watching on YouTube that this is a service that we provide for our paying subscribers, and so we don't think it'd be fair to give out for free what we charge other people for access to. So we're going to cut this off after we give our first 4 picks. But if you want to get access to all of them, we would love to have you as a paying subscriber to the Wealth Advisory. You get a lot more than just the top 10. You get monthly issues that include new stock recommendations, updates on our current portfolio, all the reports we've ever written, all of the analysis we've ever done. It's a really good deal. We'll put a link in the description below the video to a discounted membership. I highly recommend you join, but if you don't, we won't hold it against you. We'll keep putting these out for as long as you want to watch. We just ask that you subscribe to the channel. Give us a thumbs up if you like the videos. I mean, I guess give us a thumbs down if you don't like them, but we prefer not to get the negative feedback. Drop some comments if you want. You might get snarky responses from me if you wait long enough. It takes me a little while to check them sometimes. And make sure you hit the bell to get notified when we post new content, because you don't want to miss this stuff, and you certainly don't want to miss the chance to like post snarky comments to get snarky comments back from me. So with that, let's get into the top 10, and I'm going to kick things off as I always do with my first pick of the month, which is Freeport-McMoRan Copper and Gold, and I'm really more focused on this side of it, although this is pretty important these days too. Freeport's ticker is FCX. And I underline copper because Freeport's one of the biggest copper producers in the entire world. And I've practically been begging people to buy this one for a couple of years now. And it's really paying off for people who listened. Like I said, it's one of the biggest copper producers in the world. It's also an American company. It's North Carolina, I want to say. North Carolina? I might be wrong on that. Don't quote me on North Carolina. America, though. The United States of America, for that matter. And markets are currently sending copper futures to like all-time highs. This morning when I looked, we were up at about $12,000 a ton, which copper's never seen prices that high. We were at $10,000 a ton just a few days ago. It's tariffs. Trump's going to put tariffs on imported aluminum, imported steel, imported copper, lots of industrial metals there. And, people are trying to get ahead of that, front-running those tariffs, and that's sending copper prices to the moon. I think that there is a lot more to go with this. Freeport shares are up 17% over the past month, even with markets dropping 3 and 4%. So, that's some serious relative strength there. So I think that momentum is going to carry through April, could deliver another solid performance for us, and so I'm making Freeport McMoRan my number 5 pick, our number 10 pick for April. It's the wrong end. Knew I was going to do that. All right. Up next, we've got our number 9 pick. It's a good one. I think you guys will like it and recognize it.
Yeah, well, there it is. Ticker symbols right there with RTX,
Like those.
Formerly Raytheon. As Dub said, we're sticking with a lot of the winners, the things that have performed well despite, massive stock market corrections, drops, whatever, volatility, whatever you want to call it. RTX up 5.7% in the past month, 16% year to date. The defense sector has been quietly resurgent over the past few months. Things got off to a rocky start in January with some of the potential defense budget cuts. That has evened out. They got $6 billion more in the continuing resolution, so it was not a cut. It was actually an increase for defense spending this year. Raytheon's going to benefit from that, or actually RTX now, Raytheon being the defense division. They're also benefiting a great deal from replenishing stocks. Remember, Raytheon makes a lot of missiles, Tomahawk missiles, Stingers, joint producing the Javelin with Lockheed Martin. And right now, the United States has to replenish a lot of those missile stocks because we've dispatched so many to places like Ukraine and Israel and the Middle East. And we did just also get that dust up in Yemen, where we're now attacking militants there that have been targeting shipping going through that channel. So there's a lot of kind of volatility there. There's a lot of geopolitical stress despite whatever peace may or may not come from Ukraine, which, by the way, still seems to be a ways off. A lot of this still going on to the benefit of RTX. Also, the commercial business, Pratt & Whitney and Collins Aerospace, which makes jet engines and for commercial aircraft, that's also doing well. We saw it in the earnings. Annual revenue was up 17% to more than $80 billion. Net income was up 50% to $4.8 billion. And then the backlog at 11% increase of $218 billion backlog. So that's future work. That's the money yet to come, and it's still increasing. All good signs there. And then if you want to talk about some of the more interesting things that RTX is working on, they just completed a live fire demonstration of something called Deep Strike, which is a new autonomous missile launcher. It is basically a self-driving truck outfitted with a rocket launcher that can now maneuver around the battlefield without a driver. And then they're going to continue to work on that autonomy and to improve it with AI so that it can even start to eventually target and defend itself without a human controller. So that's kind of when we talk about the future of warfare and the direction things are headed, where robots do our fighting for us. RTX is on basically the front line of that, and they're succeeding so traditionally with standard missiles, but then also with these kind of advanced projects that we're seeing with, again, AI, autonomous vehicles, unmanned vehicles, these kinds of things that are going to be increasingly deployed on the battlefield. And so that's why RTX continues to do well.
That's really interesting. The autonomous.
Yeah, Deep Strike. It's pretty interesting to see it. Yeah, but I mean, the more you can take the human element out of the battlefield, I mean, you're keeping people safe, you're keeping soldiers safer, and just obviously reducing casualties as well as I guess inflicting them on your enemies.
True. I'm just glad that they're not calling it the Sentinel program. I remember from my youth, that didn't work out well in X-Men. But yeah, it's just really impressive, and being able to take the human element out. You're right, because I mean, we count wars in bodies.
Yeah. Well, I mean, actually, if you look at it since World War II, the number of human casualties in combat has steadily gone down, and it's going to keep going down to hopefully a point where they're extremely minimal. I mean, like I said, if we get to a point where it's just our robots fighting each other, that's ideal.
That is ideal. Hopefully, if we get to that point, we just stop fighting each other. You know?
Like, why are you even doing this anymore?
Exactly. It's just a robot.
This is just expensive. Now we're just throwing money away.
Yeah,
But.
pretty much. Pretty much. Maybe we could just negotiate at that point, you know. But until that point, RTX is going to be a good one for you. So next up is a company that I am personally very fond of because it has what I think is a very impressive name. The Williams Companies. For those of you who don't know, my last name is Williams. Hence the Dubs. Their ticker symbol is WMB. The Williams Companies are like a midstream company. So they're not just a great name, they're a great investment right now. And what midstream energy infrastructure is pipelines, storage facilities, processing plants, collection depots that help get American natural gas from the producers out in the field and American oil from the producers out in the field to refineries to make it usable, to customers to use it. And it's in a great situation right now because when gas prices are low, when oil prices are low, people tend to use more of it. But the thing is Williams doesn't make money based on the price of natural gas or the price of oil. It makes money based on the volume of natural gas and oil that it transports. And when things cost less, people buy more of them. So Williams will be transporting more natural gas, will be transporting more oil, and drill baby drill definitely sounds like a lot more cheap oil and gas is coming. You know, we're trying to unlock American energy, and Trump wants $50 oil. I honestly don't think we're going to see $50 oil, but you know, the cheaper it gets, the more of it is going to flow through these pipelines, and the more money Williams is going to make. They pay dividends out to their shareholders, which is another thing we really like about them. They grow their dividends whenever possible, and you know that's just it's a perfect investment for right now. You know, we know that we've got an administration that's focusing on the U.S., that's focusing on American energy, that wants to unlock hydrocarbons. Williams is going to transport those hydrocarbons for us. And like I said, pays income. That's something that you really want when there's a lot of volatility, when there's a lot of uncertainty out there. So I think there's more profits ahead for Williams Companies. I think everybody should be in it. So it's my number 4 pick, our number 8 pick for the month. All right.
Yeah.
And even if it doesn't do well, it's a great name anyway. I love having the name up on the board. How often do I get to
it
do
looks
that?
good.
It does. It's a nice logo they've got there.
All right, here we go. Eric, this is an easy one to remember because we got gold.
Yeah.
There it is.
Everybody
It says what it
wants
is,
gold.
folks. It means what it says. All right, so again, we talked about it. Dubs talked about it up top. I call it VUI, volatility, uncertainty, inflation. That's kind of what we're looking at, and it's why gold has been in extremely high demand these past few years. Over the past 3 years, gold demand has been, or actually among central banks, over 1,000 metric tons of gold in each of the past 3 years, hit a new high last year at 1,200. Again, potential for the recession is increasing. Dollar's path is uncertain. The Fed policy is in flux. No one really knows, you know, what, even the Fed, even the FOMC doesn't really know exactly what they're going to do with rates going forward. They're playing this wait and see game with inflation. They're trying to suss out government policies. They're trying to figure out, you know, which direction things are headed, what the job market's going to look like a few months from now. Nobody really knows the answers to these questions. Everybody's just kind of standing out. And then you get the demand for gold, which I said is it's high among central banks, but it's also investment demand up 25%. That's largely because of demand from ETFs. Demand for jewelry was up 9% last year to $144 billion, and you just have these widespread demand for gold, and that's why gold continues to hit these new highs week after week, month after month. And so if you're going to try to play that, if you're looking around the market and you're seeing a lot of red in your portfolio and you don't really know, the safe haven buying, the safe haven play, it's the play that everybody is making right now. It is gold, and there's probably no better gold company than Barrick, one of the best in the world. And so they just continue to get ahead in this market, and they're going to continue as gold prices rise to improve their margins and, you know, just improve that bottom line. So Barrick, very steady play right now, very good play for anybody looking to kind of seek shelter from the volatility that we've been talking about.
Yeah, just to sort of piggyback on something Jason said there, you know, it's been a lot of central bank buying that's been driving the rally in gold prices, which is why you've seen your physical gold price rising while miners haven't really, done quite as much, gold equities haven't been rising quite as much. Well, that's because central banks don't buy gold equities. They buy physical gold to put in their vaults, to back themselves up against uncertainty. But when institutional investors come in, they buy gold equities, and you're starting to see that now. Jason was pointing out that you've got investment coming up, and something that's really interesting. Jewelry used to be like the main driver of gold sales, and now it's central bank buying. This is orders of magnitudes higher than it's ever been before. So this is big, and I think we're at the very early stages. Yeah, it's a good one. All right, guys, those are our first four, so let's go ahead and do a recap here, and then we're going to cut things off for those of you watching on YouTube. And like I said, though, if you'd like to join us, we would love to have you as a member. There's a discounted link, or there's a link to a discounted membership. The link itself is not discounted. There's a link in the description below the video to a discounted membership. It's well worth your money. I highly recommend you take it. Obviously, I'm a little bit biased, but you'll get the top 10s every month. You'll get a monthly issue with a new stock recommendation every month, ongoing coverage of open recommendations, access to our model portfolio, all the research reports we've ever written, and all the coverage that we put out for as long as you want to be a member. So we highly recommend you join. And with that, here's our recap. Number 10, my first pick, Freeport McMoran. Copper tariffs are driving copper prices higher. We're seeing, prices that have never been seen before, and I think that they can continue to go higher. Freeport was up 17% last month. I feel like that momentum can carry through into April, and everybody should try and get a piece of it. Next at number 9.
Yeah, defense has been one of the more resilient sectors we've seen over the past few months. And I mean, when you kind of look around, I don't think anybody's expecting a rapid or quick end to the conflicts that we're seeing in Eastern Europe, the Middle East. Again, we just had an issue where we're bombing, Houthi rebels in Yemen. This stuff, it's still escalating. There's increasing tensions with Iran. You put out one fire, another one springs up somewhere. RTX, great benefit, not just of the global insecurity, but of backpiling U.S. demand, backstocking U.S. missiles that we've shipped off, and the commercial business also doing well.
Doing really well. That commercial business, not many people pay attention to that, but that's big. There's demand growing in the private jet sector. Mm-hmm. Apparently those people are doing really well. I don't know. Maybe we could split a private jet in a couple of years. I don't know. We'll go halvesies on it. Okay, coming in next at number 8, we've got the Williams companies, pipelines. They're transporting natural gas. They're transporting American crude oil. They're focused on the U.S., all over the East Coast, the West Coast. They help get the stuff from the fields to the refineries, from the refineries to the customers. It's a really good business to be in when natural gas and oil are cheap and flowing freely. And that's what looks like is going to be coming. So we think Williams is going to have a big profit from that. And then finally at number 7.
Yeah, safe haven buying, global diversification, a lot of demand for gold at the end of the day. And that price pressure, that upward pressure on gold prices, it's going to persist, and it's going to do wonders for Barrick's bottom line going forward.
Yep, I like that acronym you have, VUI,
volatility, uncertainty, inflation.
There's lots of all of that going on. All right, folks, well, there you have it. I think that's a really good list for those of you watching on YouTube. I think those guys are all going to perform well. I think they can all beat the markets this month. They are definitely all safety plays, and that is what the market seems to want these days. So with that, we're going to bid you adieu. Thank you, as always, for watching. Have a great month. Happy Easter if you celebrate it. That's coming up later this month. And we'll see you next time. Take care.